There's been a lot of buzz lately, headlines screaming that trillions of dollars have been wiped out from the stock market. Trillions! Sounds dramatic, doesn't it? But let's pump the brakes for a second, because while the market's taken a beating, that's not the full story, and it's certainly not as simple as money vanishing into thin air. So, the big question everyone's asking, where did all that money go? Here's the reality: it didn't go anywhere, at least not in the way you might imagine. We're not talking about $1.5 trillion in cold, hard cash being yanked out of Wall Street and hidden under mattresses. What we're really seeing is a steep drop in the perceived value of companies. When stocks tank, it's because investors are hitting the sell button hard. Maybe they're spooked by recession fears, or perhaps it's the uncertainty swirling around trade policies like tariffs in the Trump era. Whatever the trigger, when that selling frenzy kicks in, stock prices plunge, and the market's total value, what we call market capitalization, shrinks fast. Take Tesla, for instance. Today alone, it shed 15% of its stock price, wiping out roughly $125 billion in market value. That's not cash draining from Tesla's coffers, it's just that fewer folks are willing to pay yesterday's premium for those shares. So, that $1.5 trillion, or whatever jaw-dropping number we're pinning on today's chaos, it's not gone in any tangible sense. It's a paper loss, a reflection of battered investor confidence. Poof, evaporated, at least for now. Some of that value might be shuffling elsewhere. Safe havens like bonds or gold are getting a look, with 10-year Treasury yields dipping to 4.22% today as demand ticks up. But by and large, this lost money isn't sitting in someone else's pocket. It's simply off the table until the market's mood swings back and prices climb again. That's the game we're in, volatile,